Hi guys, sorry about that mumbo jumbo last slide. So anyway, this will be quick, only have 5 slides to go. So basically what this slide is showing you is money supply. And so if you raise the marginal rate of taxes, that's considered contractionary fiscal policy. It increases the income tax collected on last year's income, which is represented by this YT1. So expansionary fiscal policy lowers the marginal tax rate, which would cause the revenue collected by the government to fall rather than to increase. So expansionary fiscal policy is going to have a decrease on the effect of the amount of taxes collected. So a decrease is a shift to the left. So this graph shows a decrease in the amount of taxes that are collected. Okay, we're just going to move on. So this is a kind of an interesting slide. So basically, because this might be our future, effects of fiscal policy actions. If the level of government spending remains unchanged, the level of the budget deficit will fall in the short run. Expansionary fiscal policy in the form of a lower marginal tax rate, on the other hand, causes revenue collected by the government to fall, which increases the budget deficit. So basically, if we lower taxes, we collect less taxes, and we have the same amount of expenditures, then you're going to have a budget deficit. So it's just like not making enough money to cover your bills. That's basically what budget deficit is. Okay. So this is the deficit and national debt, which is something your book does a very good job covering. It's kind of interesting, actually. So the level of the national debt in the current period is equal to the national debt at the beginning of the period, so January 1, plus the deficit incurred during the period. So a budget deficit is when you fall short. So they have the little formula here, but this is really the good part. It says if the government runs a deficit, the government government spending is greater than the amount of taxes brought in the current period, the national debt rises. If the government runs a surplus, in other words, taxes are greater than government spending in the current period, the national debt would fall. Seems so simple. Okay, and then one of the last concepts is this idea of crowding out. So crowding out is when government activity supplants private business activity. So you have to realize the guy that wrote your book is very conservative, and so he is very pro free business, free enterprise, capitalism. So basically he's saying when government comes in and supplants private business activity, that basically crowds out beginning businesses or private businesses. So direct crowding out occurs when government activity supplants private business activity. Indirect crowding occurs when the federal government borrows to pay for the difference between government spending and revenue deficit. The Treasury does this by issuing new government bonds, which is kind of what we're doing right now because we're trying to keep people able to put food on their table and not have to go to work because of the COVID-19 virus. So that is kind of what indirect crowding is. And that leads to less available capital in loanable funds market, could potentially raise interest rates, and that thus reduces private investment expenditures. Hopefully that doesn't happen, but that is kind of the general trend when the government does indirect crowding. Okay, so the concepts covered, I think there's a few here. The function of money and the role of the Federal Reserve. We didn't talk about the money multiplier. The tools of monetary policy. We talked about the demand for money, money market equilibrium. We saw how the Fed, which is the Federal Reserve, can take actions to reduce or eliminate recessionary and inflationary gaps. And we talked the difference between discretionary and automatic fiscal policy tools, talked about expansionary and contractionary fiscal policy, discussed how fiscal policy can be used to reduce or eliminate recessionary and inflationary gaps, defined budget deficits and national debt, and the concept of crowding out. Okay, and that's all I got for this one. Very short. Okay, talk to you later. Bye.